Some think this young woman's small tailor shop only works with cloth and thread. Little do they know, something greater is quietly being pieced together.
Thank you. Kongsi. Bye-bye.
Girls, let's pack.
Boss, actually there's another job.
What? How can we finish it in time? Who is it for?
Oh, my best friend.
Boleh je. You go now and enjoy your reunion dinner. Go.
Go. You can come back tomorrow.
Silap-silap kita ni orang yang last kali rushing for Chinese New Year.
At least you got salary and job, ma. No complain, lor.
Less talking. Faster finish this lah. And don't forget, once this is done, we still need a design that can represent all of us, you know. We can make it, right? It's Chinese New Year, you know. This is so heavy and muddy. Why do you always pick the lotus?
I remember when I was a young girl, my mom told me that the lotus is a lot like women. Kak Aini, Maru, Amay.
Bos, ingat tak masa tu? Ada tak mampu nak bayar rental rumah. Tapi you datang.
Why don't you come work with me?
You showed me how to live with dignity.
I telah cakap berapa kali, kerja diam tak boleh bawa anak, Ma.
You can speak up for yourself.
There was a time I honestly didn't know how to continue living. It was you. You told me everything was going to be all right.
It'll be okay. Come, follow me.
And that has carried me until today.
We made it for you, the lotus. Because it was you who told us that the
Lotus doesn't choose easy water to grow in.
Even when it grows from mud,
It keeps its beauty, untouched by what tries to hold it down.
It is you that reminded us, no matter how difficult things become, you don't lose who you are.
Thank you, everyone. In the end, the greatest wealth is knowing our true worth.
And that is the story of this young woman's small tailor shop that has been quietly helping hundreds of women piece their lives together again.
Right. Morning, everyone. Welcome back to our morning company at 8. Hope you had a very good weekend. All right. Let's start off with the market recap. And we do see right now that the Hang Seng Index have a very erratic move last week. Initially on the Friday, right on the first day of the market resumptions, index was actually went down. But in the evening, it staged a very strong rebound, and the evening session is still in play right now until the Hang Seng close at 4 p.m. today. So looking at the index overall, right, the bulls still have technical advantage, as you can see that on the evening session. Hang Seng climbed above the 50 days moving average, and right now eyeing to cross above the 20 days moving average. We still see a bullish bias on the Hang Seng Index as long as it stay above these 400 point levels. Now you look at the last 2 weeks or 3 weeks price action, right? The sentiments was dented after these two black candlesticks actually emerged, right? And we take a look at the last 1 week Hong Kong market performance, right? All the Hang Seng Index components are mainly experience different degree of corrections, except that oil company, the 883 and the 857 continue to lead the market higher, right? And also we do see that you look at the Hong Kong China Enterprise Index, right? Some of the pharmaceutical and their gold stocks continue to stay on the high side as well. So I think that in the Hong Kong market, funds continue to favors on the oil and gas stocks, right, as well as the pharmaceutical or the biotech counters, right? And for this morning, I'll be looking at two counters. Firstly, the Petrol China 857, which they just break past the 9 Hong Kong dollar 40 cents. So riding on this momentum, right, Petrol China will be testing the 10 Hong Kong dollar followed by 10.50, right? And also supports market 8.80. Then on we have the sense time, which the only tech stock that are bucking the trend, moving on the higher high. So right now testing 2 Hong Kong dollar 70 cents, a break with top sense time towards $2.90 and followed by $3.20. Also support is $2.45. Let's look at the commodity market. You can see that the crude oil continue to stay on the high side after the news reported that there's another warship that's getting near to the Iran territory, right? Sentiment has been, market is still looking at what's going the next development in the Iran, and that have actually sustained their market sentiment so far, right? And as for the WTI crude oil, we still keep a bullish bias, and with our stop loss at 58 US dollar per barrel. So on the upside, the crude oil may test 68 and followed by 70 US dollar per barrel. Now, as of the COMEX gold, right, this morning, Monday, right, the gold continued to move upwards during the Asia time zone, right? Right now, the COMEX gold have formed a very strong support at 4,005 and 4,008. We keep a bullish bias on the COMEX gold right now, with our stop loss at 4,008 level. Right. As for the over the weekend, I think market, you may know that the U.S. Supreme Court has ruled the Trump using the IEEPA as unlawful, right? But I think that for our market, one thing that we need to actually pay attention to is that how the market will react to it, particularly on the U.S. government 10-year bond yield, right? As for the last 1 week, bond yield start actually creeping upwards. If the bond yield continue to move higher, right, that may actually give a negative sentiment on the US stocks, which is trading at a very high multiple right now. So we just have to monitor closely how these 2-year, 10-year, and the bond yield react after this tariff news breakup. Right. Secondly, looking at the U.S. equities market as for Friday, right, SPX have responded positively on the Supreme Court decisions. As of right now, SPX still show bullish setup. With on the downside, we think that the very strong support on the long-term basis will be a 6,006 level. So as long as SPX stay above this level, right, recent corrections it's only a mild pullback, and going forward, right, SPX should retest the 7,000 level in coming days. Now, as for the trading stocks, we're looking at GE Aerospace that break past $340 US dollar on Friday, heading towards the 360 and followed by 380. Downside, I was at 320, 325 as the stop loss point. Then on Occidental Petroleum, OXY also have a very strong gap up last week after they posted a better than expectations quarter result. In terms of the sectorial, you can see that US market right now, apart from the tech stocks, apart from the memory counters, I think one of the sectors that I'll be looking at will be the energy, right, oil and gas. And you can see that OXY is now testing the 52 resistance. So if the breakout happen, it will going upward towards 55 and followed by 58. Downside, I'll set a stop loss at 49 US dollar. All right, so one breakout stock, GE Aerospace, and pending breakout, Occidental Petroleum. Now, as for Malaysia, right, after 2 weeks of corrections, finally last week, a short trading week, right, the FBM KLCI crossed above 1750 level again, right? On the weekly chart basis, you can see that the index has been trading steadily above the 20-week SMA line, right? If you look at the daily chart, I think the FBM KLCI also moving above the 20 days, moving average line steadily as well, right? So since the FPM LCI right now resume on the upside movement, right, very likely that it challenge the 1,008 level. So on the downside, very strong major support is marked at 1645 point level. Now, as for the last week, we can see that a lot of counters have staged a counter trend rebound, led by the energy sector that went up by 3.3%. The healthcare sector went up by 2.72%. Now, last week, only the REIT and consumer sectors saw outflow of fund. Most of the 11 sectors have recorded a positive gains over the week. Right, hopefully that coming 2 or 3 weeks, we can see the CNY rally. Usually on the seasonality, right, this mid-February towards the mid-March, this is actually a very good window for the index actually to move higher. Now then on the FKLI, we still keep bullish bias with our stop loss set as 1690 point. Now as for FCPO, right, we think that the resistance is formed at 4250. As long as the FCPO stay below 4250, we'll keep bearish bias on the FCPO. As for the trading talk this morning, firstly, we'll be looking at Alma Resources that have break past 50 cents resistance. The next R1 will be at 65 and followed by R270. Counter support is 55 cents. And then on we have Ever also break up from 53 cents resistance. Next, first resistance 56 and followed by higher resistance 58. And on downside support is market at 51 cents. So we have two breakout stock in Malaysia market. Firstly, Alma Resources and followed by the Ever Sendai. I'll stop here and I'll pass on to Sian on the Malaysia trading note. Thank you.
Thanks, Joseph. So, good morning, everyone. Just a quick update on Malaysia's trade note, which was released on last Friday. So, Malaysia January trade data was released on last Friday, where we are seeing that the exports actually begin the year on a strong note, with growth exceeding expectation. So, export performance in 2026 will be driven by 3 key trends. So, firstly, robust global and regional growth. Developments in US tariff, where recently we are seeing some signs of easing in the US tariff, and also continued strength of the E&E exports. So our positive outlook for 2026 is reinforced by the robust trade data, where January exports actually increased by 19.6%. So higher than December's print of 10.4%, and also beating market consensus and our in-house projection of 14.3% on year-on-year basis as well. So by product, so we are seeing that the manufactured goods growth accelerated by 22.3%. So underpinned by increased shipments of E&E products, optical and scientific equipment, as well as machinery equipment and parts. E&E products, which is the largest and accounted for 48% of the total exports, expanded by 39.5% in January. So meanwhile, the imports increased by 5.3% on year-on-year basis, in line with our in-house projection of 5.4% as well for January. So on that basis, the trade balance recorded the highest surplus of 21.4 billion ringgit. So for full year 2026, so we expect the momentum to actually continue in exports. So with the export growth projected at 9.3%, so where we are seeing that the E&E sector, which is a cornerstone of Malaysia export base, is expected to maintain its growth momentum in this year. So driven by continued global demand for semiconductor components and also consumer electronics as well. However, despite of our sanguine view, we remain cognizant of the potential downside risk from major trade partners, including a potential demand slowdown in EU and China, which could potentially weigh on external demand as well. Additional risks are including shift in US trade policies, evolving regional trade dynamics, and also the potential of further broadening of sector specified levies, particularly on semiconductors as well. So over the weekend, we have also seen some developments on the US tariff as well, where on Friday, the US Supreme Court has actually ruled that President Trump has exceeded his authority. So using its emergency powers, which is under IEEPA, to impose a sweeping global tariff. So what does it actually mean to the global economy and also market? So first of all, tariff did not disappear. Only tariff introduced under the IEEPA, affecting global reciprocal tariff amongst other, including Malaysia, will be affected. So in response, Donald Trump actually intends to sign executive order under the section 122 of the 1974 Trade Act to impose a global tariff rate of 10%. So which also allows the president to impose a tariff for 150 days without a congressional approval. So and then on Saturday itself, President Trump further announced that he will increase the global 10% tariff, so earlier to 15%, which is also the highest rate allowed under this law. However, these tariffs are limited to 150 days only, as mentioned earlier on, unless they are being extended by the Congress itself. So additional details were not immediately forthcoming on how soon the 15% tariff will go into effect, although the 10% tariff that he announced earlier on was scheduled to go into effect on 24 February. So according to a White House fact sheet. So other specific tariff on commodities, so which including steel currently, aluminium, automobiles, copper, and lumber, are still reportedly unaffected. So on market-wise, we are seeing that the development will be positive for the markets, where the news actually led the key global equities higher, though the rise is muted as the decision to rule against the IEEPA-led tariff was largely expected. So on asset allocation-wise, we still maintain our view on overweight on equities, market weight on fixed income, and also underweight on cash. On ASEAN-wise, with global reciprocal tariff now in limbo, we foresee supply constraint headwinds to dissipate, leading to stronger external trade outlook for key ASEAN economies, especially for Malaysia currently, where we potentially seeing a lower reciprocal tariff, where compared to currently 19%. So in fact, we have been penciling upside risk to Malaysia GDP to 5% versus our current baseline view of 4.7%, whereby the upside risk is now more pronounced, especially we are seeing the continued strength in the external demand itself. So on the other hand, on refund-wise, currently the court ruling does not address whether importers are entitled to refunds, leaving the matter to lower courts, which actually have a potential exposure of up to $200 billion. So, and then we do not subscribe that the tariff refund may be a risk to the markets. In fact, it could be a boon. So where we are seeing that the potential tariff refund of up to $200 billion is a drop in the ocean, when balanced against the current total US debt of around $38.6 trillion, with a moving debt ceiling of around $1.1 trillion. So suggesting that the government could easily finance it via debt as well. So that's all from me. I will pass the line to the next presenter. Thank you.
Okay, good morning everyone. Today we have a results preview on Inta, Bina and Kerjaya Prospek. So for Inta, Bina's fourth quarter results, we expect it to be between 7 to 11 million ringgit. And if you take the higher end of 11 million ringgit for fourth quarter, we are expecting a year-on-year growth of 33% for this upcoming quarter in terms of the results. And we think that this is due to the strong order book of about 1.8 billion as of end of September of last year. But in terms of its actual FY25 year-to-date wins, it has secured about 865 million ringgit of new contracts, and this is below our initial estimates of 1.1 billion ringgit. We understand that a lot of developers last year were pretty much in a wait and see mode, especially after the expansion of the SST, and we think that developers were cautious, but given that some of the launches were delayed, we understand that there would be some of the launches that will be carried forward to 2026, which would benefit people, counters such as Inta, Bina. And for context, Inta, Bina's key clients include developers like Sian Property, Gamuda Land, EcoWorld, and even UM Sunrise for that matter. So, given that our actual FY25 job win assumptions were higher than what actually was announced, we are deciding to lower down our FY25 to 27 earnings by 3 to 5%, which then brings us to our new SOP derived TP of 76 cents, previously 81 cents. But all in, we view that the stock is trading at attractive levels of 5 to 6 times PE, and we view that this is unjustified given that on top of construction, they do have other property development arms that has a total GDV of currently 200 million ringgit. But moving ahead, they are planning to launch about 2 development projects which have a total cumulative GDV of 500 million ringgit. So moving on to Kerjaya Prospek, which is a results preview note also, we understand that Kerjaya Prospek will be releasing their results this Wednesday, and we expect for Q 2025 core earnings to be between 60 to 70 million ringgit, which translates to a year-on-year growth of between 15 and 35%. And this is due to higher progress billings coming from their ongoing projects. For example, the Astrum at Ampang, which is Kerjaya's largest single project secured worth 710 million ringgit, has probably reached about 80 to 90% of progress as of end of fourth quarter of last year. And even if you look at certain projects that were just secured by Kerjaya, particularly Viara 15, which was for Kerjaya Prospek Property back in November of last year, we actually paid a visit to the showroom in Shah Alam, and we actually saw that there has been some progress for the project, which I think they have already done pretty much the first story. And other than that, in our previous ground checks note, we highlighted that Sri Embun, which is a project by ENO awarded to Kerjaya Prospek back in January of last year, has seen about 40 to 50% progress, which would continue to trickle down to its bottom line. And we think that even in the longer run, property development arm would continue to be stronger, given that they have 89 acres of land bank, which they plan to gradually launch starting in the second half of this year, and the GDV is at least 3 billion ringgit based on our estimates. So all in, we make no changes to our earnings, and hence our target price of 3 ringgit and 35 cents for Kerjaya Prospek is unchanged. Any potential relating catalyst would be if we were to secure, any new projects, particularly from the industrial side, such as data centers. So that's all from me, everyone. Thank you for dialing into RHB Morning Kappa at 8. We will see you tomorrow at the same time, same place. Have a great day, have a good trading day, and take care.